Hello everybody, Dwayne Shepherd here, DRFX Forex Swing Trading. Taking a look at the situation on the US dollar Canadian pair. Here we see that the market has actually started to pull back below this inner uptrend line, and we could actually see the pair moving lower in favor of the Canadian dollar towards this outer uptrend line. Now, what is the reason behind what's taking place? Well, taking a wider view of what's been happening, you can see here that we have actually hit a resistance point of 130.64 that was formed just over 5 years ago in 2009. Now, as you would see across the currency market, whenever major resistance and support points are hit, you normally have the market pull back sharply to either then resume the current direction of the market or pull back to start a reversal. So those are the two possibilities that we could see taking place for this pair. An example of this situation took place not too long ago on the Canadian Swiss franc. This downtrend gradually came to a halt, came to a halt when we hit this support point formed in 2011. You see here that the market broke just a little below the support point and then was followed by a reversal that took us higher, closer to the downtrend line, and we're now starting to see the market reverse and move lower to possibly continue the downtrend. So this is an example of what takes place whenever we hit these major resistance and support points. So based on that, it is very likely that over the next couple of days we start to see the market move lower in favor of the Canadian dollar based on what normally takes place at these major boundaries. So I wouldn't be surprised if, as you can see here, based on my forecast a couple of days ago, I wouldn't be surprised if we actually see a movement lower in this direction here instead of a break and a rally in favor of the US dollar. So that explains what has been taking place and what is likely to take place over the next couple of days. So essentially what has happened is that the market first of all hit the resistance area, then pulled back and attempted to resume the uptrend with this U-turn and these bullish candles, but eventually the bears took control and we're now seeing the market pull back below the uptrend line with this strong bearish candle. So this could be the start of the expected reversal and a movement at least towards this trend line here. So that is what I'm seeing as possible over the next couple of days. So we'll have to wait to see if we get a strong formation that we can trade. One of them could be actually a bearish crown, or otherwise known as a head and shoulders pattern. We could see the market pull back initially a little below this area here and then rally to then form the right tip or the right shoulder of that formation, with this being the left tip and this being the center tip already formed, followed by, and then once that right tip is formed, we would then have a breakout that carries us lower in favor of the Canadian dollar towards this trend line here. So that is what I'm seeing as a possibility over the next couple of days, and hopefully, again, as usual, we're looking for a trading opportunity that can provide us with between 100 to 200 pips. So until then, take care.